Good morning, ladies and gentlemen. This is Butch Shorak. It's Tuesday, September 4th, 2012, and welcome to the first week in September. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look and see what's coming in this coming week as far as economic announcements. Monday, of course, was the holiday, which was the first day of the trading in September. And as we look at the rest of the week, we see that on Tuesday we have manufacturing index, PMI. We have the ISM manufacturing index, which certainly can move the market, coming on Tuesday at 10 o'clock. On Wednesday, not a whole lot there. Productivity and costs at 8:30 probably won't move the market all that much. Of course, when we come in on Thursday morning at 8:30, we always have jobless claims. We have the ADP employment report checking out for the month that took place. What was our employment numbers? How many new jobs did we have? ISM non-manufacturing index is at 10 o'clock on Thursday, also capable of moving the market. And then we look on Friday, September 7th, at 8:30, we see the employment situation, exactly what was the unemployment numbers and how many new jobs were there that were created in the month of August. So certainly have some news in this coming week. Add to that the news coming in from Europe, as Europe is going to have a big week on announcements. How well are they going to back up their problems? How bad is their recession going to be? Could be an interesting week as we head into this many times bearish month of September. One of the worst trading months of the year if you're a bull. And then as we look at the overall market, let's see what we're looking. Where are we at? Well, the trend is still the trend until it ends. And currently that trend is still up. Now, as of recently, we've been resting a bit as we've been going sideways between a very, very tight zone. But we're still sitting above that 30-day moving average and therefore still have an uptrend in place. Let's take a closer look and magnify that SPX chart. Looking at a 1-month chart, you see that if we look at the last month, what have we done? Basically, if we look at that blue area there, we haven't done much of anything. We've been trading between 1398 and basically around 1417, except for that one day there where we had that pop-up. So as we went through the month of August, we really traded basically sideways. We certainly did have an upward run in the month as the uptrend really took on some character, but it didn't run all that far, as you'll see in a few minutes what we actually did for the last week. All right, with that thought in mind, let's take a look at the Dow, see what we did with the Dow. Dow trading closed right at the 30-day moving average. It also had a nice run during the month of August, found its resistance up there at 13.3, struggling at this point to stay above that 13,000 number as we're sitting between the 30-day moving average and potentially the 50-day moving average. What will the Dow do for us in the coming week as we enter into September and as we see many of the big boys come back off of vacation? Many of them will dump their portfolios, dump those things which they no longer want and those things which were accumulated during the summer. September is kind of a clean house month. Next, let's take a look at the NASDAQ, see where that sits well above the 30-day moving average, showing relative strength to the other Dow and the S&P, and we see that we certainly have been going sideways on the NASDAQ, well above that 30-day moving average. With that thought in mind, let's take a look at the Russell, and we see the Russell again showing some strength. Did not really come out of its trading zone established about a week ago, but we see we are trading a bit sideways on the Russell, trading above that 30-day moving average. And where will September bring us? Be aware and be careful. I've seen many traders lose what they made the entire rest of the year in this month of September. So be careful as we have our adjustments. Going into the fourth quarter, which will come up next month, which tends to be the strongest month of the year. As we look at the last week, looking at the Dow, the NASDAQ, the S&P, and the Russell, we see that they're all in negative numbers except for the Russell. The Russell is one of those that we could potentially see a small positive move out of in the month of September. Historically, that's what we'll see out of the Russell. When we look at the others, we generally see negative months. In 16 out of the last 18 years, S&P has been down in the month of September. For the last month, we saw the S&P was down 0.3%, not all that much. Dow down 0.5%, NASDAQ down 0.1%. For the year, still nice figures up for the year, almost 12% for the S&P, 17% for the NASDAQ, Dow up 7%, Russell up almost 10%. So for the year, we had that great first quarter, and during our summer rally, we tended to hold on to much of what we had seen earlier in the first quarter of the year. All right, with that, let's move on and take a look at some of the different sectors that we have to deal with when we're dealing with the market. But first, let's look at the VIX, and we see that the VIX had its run up as more volatility came into the market. As we began to pull back just a slight amount, we put ourselves in a bit of a down cycle, and we see that the VIX did pull back a little bit on Friday, as there was a bit of a pop out of the S&P, expecting good news out of Bernanke at the G7, and we really didn't get it. But what he did say was that he was concerned and that they were ready and willing to do if things were necessary. Again, that issue, they do not want to influence the election. When we look at the bonds, we see bonds had a nice move up today. In spite of the market going up, we saw bonds pop up as we saw a bit of a charge above that 30-day moving average. You notice we have a crossover here at the 30 and the 50, and we'll see whether that holds or not as we saw that move up in bonds. Next, let's take a look at the financials. We see the financials moved up with the overall market, and so we are still trading above that zone that we had for most of the summer, as the financials certainly tend to move up when the overall market moves up. They also tend to move down when the overall market moves down, so watch that month of September. Have I said that before? All right, next, looking at oil, we see oil was pulling back in a bit of a down cycle, didn't make it to the 30-day moving average, and we see that on Friday we got a doji out of the market as we've seen a pop up in USO, which is our ETF, which tells us a bit about the oil market. Next, we have take a look at gold, and look at that flight to safety, as we saw gold have a huge candlestick up on Friday, as a little bit of fear seems to be there, even if it didn't show in the VIX, as we had a little bit of a pullback in the VIX. Look at that gold pop to the high of the month, and didn't seem to have any doubt that it wanted to go there. And look at that volume, plenty of volume there, as we saw some move to safety on Friday. Will that follow through on Monday? On Tuesday? We shall see. Remember, 4-day trading week this week in the first week of September. And finally, what kind of volume did we have? As we had a little bounce up off of the S&P, looking at the spider to give us an idea of volume, and we see that we had a little greater volume than we've been having during the entire most of the month. So it's kind of a commitment to the upside out of the market on Friday. Let's look for follow through on Tuesday. And with that, we'll have our list of stocks that we'll take a look at for those of you that are gold members. For you that are not gold members, if you'd like to see more free videos from Options University, go to optionsuniversity.com/free gold. And this is, with that thought in mind, Butch Shorak, Options University, Tuesday, September 4th, 2012, a shortened week in the market and the beginning of the end of the third quarter, which can sometimes have a lot of volatility into it, and just enjoy. Thank you for being here.